The stock market's flashing warning signs. Breath is thinning, momentum is slowing, advances and decliners are weakening, commodity prices are rising. This is no longer a rising tide lifts all boats market. There are sectors and technologies that are going to lead the way. There will be doubters of this new technology. Sometimes they will be right and other times they will be wrong. The important thing for us as traders is to get ahead of the curve. Let's get into it. 27.5% of you listening right now do not subscribe to the channel. Click subscribe, all notifications. Let's get into it. Now, today we're going to go down a couple different paths. I want to go through some sectors broadly, not deep. We're going to cover that later. But more importantly, I want to point out the sectors and where I think this is going. And we have to go through a couple other names that are definitely going to be affected by this week. But I think we have to start broad on the market. As everyone knows that watches these, I'm index sector stock. I trade top down, not bottom up. You are coming into a stock picker's market. I'm going to show you how you can actually see it happening right in front of you. But there's some core concepts that we really need to get here. In front of us is just very simply the SPY. And then you have the 5-day moving average, the 20, the 50, and the 200. And these are percentages above those moving averages. For example, here you are, and you can see where you're at in regards to those moving averages. And the 5 I have as a percentage right now. So you're at this negative. If you're up here, you're in for a short-term pullback. What I really want to focus on is the 20, the 50, and the 200. Very important to get this. The 20 is now below 50. So 55% of all stocks in the S&P 500 are now below their 20-day moving average. And if we look at how this has played out in the past, you can see that 60 line and then the 50 line right here. What is super important about this stuff is to understand that some of this stuff is actually demarcation lines. So if you drop from that 50 over and then you looked at the time and what happens to the market when you break 50, you'll note very clearly on a short term, you tend to gravitate down. And you can see it breaking that 50 or holding that 50 as a demarcation line for things to come. So it's really important for us to get this, that we must get above this on the 50. And we'll be monitoring this that week, 50% of the 20-day. If we look at the 50, we're still above that, which is great. And it's definitely important. But if we just, let's clean this off for a sec so we can look at this a little cleaner. We need to watch this because this is the canary in the coal mine. Like if we start to lose this, you're going to start getting a pattern like this. And if we start getting that drop, then we're going to start getting the drop in the 50. Really important concept to get, and we don't want to lose that. Remember, when we look at these moving averages, they're telling us a story. Every moving average is a demarcation line, and we'll go through those demarcation lines in 1 second here so that you can use them the way that I use them. You should do what you're comfortable with, but I find this very helpful for me. But if we're looking here, we broke. It's that simple. The 50s are above, so we'll take it, because it's good and it is what it is. Even if it was bad, we'd still have to take it, but it is what it is. If we take a look here on the 200, we can see that 45% level, and that is not really where we want to be. And once we break that 50 again here, and we can see this, what we'll do is we'll squeeze this one down and this one, and let me just blow this bad boy up a little bit, and we can see that level right in here. And you can see the symbols here, so you can actually look these up for yourself. But what is this telling you right in here? Well, it's telling us that, hey, by the way, when we hit that high up here, more names were actually under their 200-day moving average than over. That's not where you want to be at all. And then that also ties into some other levels up here where you have that December 18th itchy bar, where he cut rates and he has no idea why he did what he did. And he was very clear about that. Like, I don't know, we decided to cut rates. And it was really a mistake, in my opinion, because it really threw everybody for a loop. And quite frankly, you've never been above that. But I do think you have a divergence here. Do I look at divergences on these? I pay attention to the long-term one because it doesn't make sense. Like, if the breadth, and this is obviously a very clear indication of breadth, if the breadth is getting weaker and less stocks are going above the 200-day moving average, that means that it's less stocks that are lifting me up into here, which means it's only going to take less stocks to drop me back down. That's why you pay attention to this. Now, if we just take a look at the MACD histogram, which I tend to look at on a daily, but also on a 4-hour basis, we don't have any change in color. And there's two things here that bother me about the S&P on the MACD histogram. And I like the histogram specifically for have we bottomed? That's how I tend to use it. You should use it how you're comfortable with. But I will look at this and say, have we bottomed? So if I look at the S&P, and on the 4-hour, I'm completely red and I'm pointing down and I'm nowhere near any of these others. Like I haven't even gotten to that level of the previous ones. It's a little bit of a red flag. It's not a little bit of a red flag. Candidly, it's a red flag. Like my antenna's up. And I'm looking at this on the daily going, okay, well, we're lower than we are here. I don't really use it for these higher highs. This is how I use it. You should use it how you're comfortable. But we can see these turns in color, and they mark very clearly when you've hit a bottom. Whether you like that or not, I don't really care. But it does mark like, oh yeah, they change colors. There's a sign that actually might be the bottom. It doesn't mean you can't flip the colors again, but it does give you an indication that's worth paying attention to. And I think there's significance in that. But for me, in looking at this, I think the most important thing to understand is, yeah, you could roll over. And when we look at something like this, and I'm just going to get rid of the vol for a sec, because I don't really care about the end of the day vol. I look at the moving averages and say, okay, well, here's the 12. Do I want to swing trade the market? If I'm below the 12-day moving average, I don't really want to swing trade. The brakes go on. The 22 are the bulls and bears in charge. The bears are in charge. And so you can tie the 20 to that other graph that I just gave, where when we look at that graph, what I'm looking at and saying on the 20 is, if 50% or 55% are below the 20, and I use the 22, you should use what you're comfortable with, then that's telling me something, and I have to listen to it. If the bears are in charge of 55% of the stocks, do I really want to be in the market trading and holding long term? Probably not. I probably want to focus on specific themes. Well, we're getting there. And institutional support, which I still have. So if I view it that way, I'm good. And there's a lot to cover, so I want to go through the big bells broad, and then we're going to go deep here into SAC. But again, do I look at this divergence in the McClellan summation? I really don't, and perhaps I should, but I'll tell you why I don't, because I don't find it helpful. So when I see these divergences here, it's like, oh, that's great, Rocky, that and a bowl of soup got me a bowl of soup, right? Yeah, oh, well, eventually it fell. Okay, well, Christmas also came, so it didn't help me. What helped me was when I can't get above that zero line, that's important to me. When that zero line breaks, I need to pay attention, because it does not happen often. And when it does, you can see that led to what? That was that August 4th. And you can see right here, this led to Christmas when we sold down. And what you're seeing here is exactly what I don't want to have happen. If you're a bull in the market, rallies up, retests, rallies up, and now we've broken again, and we've broken that moving average. And this is the McClellan summation. We're not going to dive into exactly what this is. You can look it up for yourself. I've gone over it too many times. That's why I say these videos are all linked. But if you look here, it's not great. We don't want to break this, and we certainly don't want to hit a lower low here. So we should be monitoring this on Monday or Tuesday's close and seeing what happens. But that leads us to other issues. Commodity prices are rising. And one of the things that we saw with commodity prices was Goldman recently had a piece out where they were talking about commodity prices, and they said very, very clearly that they see inflation starting to rally and rise coming up. And if we look at inflation, this is becoming an issue. Let's get to some details and look at what's happening in Europe and how we can utilize that to determine what's about to happen here. Now I'm seeing a development, and I want to spend some time on it, specifically this VGK. And what we're noticing about this VGK is relatively simple. You're starting to roll over here, and that might be the greatest concern in the world, but these are the single greatest companies that are out there that are in Europe, such as SAP. So all of a sudden we're seeing names like SAP, which obviously we can see the high, and then we can see the lower high here. And we can see the behavior of this, or we could look at ASML, which is also one of the top companies in Europe. Anything like this, we want to look at and go, okay, well, what is the issue? What's actually going on over there? Novartis is in here. Roche is in here. So a lot of your really big companies, and I think we can still see the Roche, right in here as well. Why is this happening, and why are we seeing this take place? And I believe we also have HSBC that's in here, which is Europe's largest bank. And we're going to get to this one in a second, but what is this telling us? I think it could be a precursor, and I'm going to show you why I think it could be a precursor to what could happen with the S&P. But I think we just have to look at the basics for a second. So if we just take a look at the bear chart right here, and then we drop it to a weekly, and then we look at this on a weekly basis, and anybody that would see that would know that that's basically a Marbuzu black, which is usually telling you that, hey, you're in for at least another bar of nonsense, and here comes your other bar of nonsense in this case. And we can see that, yeah, you have a major support here, and that can get you down, but that's about 5 or 6% from there. So it's worth noting, and that's something that we want to pay attention to. What else I like doing with this is I just like looking at a rate of change, and I like looking at RSI, just to get a sense on where we are. And we can see that the RSI is pretty negative on its basis here, where it didn't really make the higher high. It attempted to, and then it failed. And that All right, that's one thing, but what about rate of change? And this is the canary in the coal mine to me. So if we look at it on the weekly, we would say as long as we're above the zero, we're fine. And we're above the zero. And we're coming down, and I don't care if you're coming down or going sideways, because rate of change is just that, the rate in which something is changes. What you don't want is you don't want it going negative. Now, saying that, guess what you just started to get? For the first time since we flipped it, we're getting a negative rate of change on VGK. And again, I wouldn't care that much, except that it has the biggest companies in Europe in it. And now with that negative rate of change, which started, I'll just drop a pin to it so you can see where we're going with this. You're right there and you can start seeing it fall off. We need this to bang a U-turn. You have not had a negative rate of change since you were down. If you were pointing up, you'd at least be accelerating into the zero line. But it's telling you right now you're going to have a negative rate of change. It's almost impossible to look at this chart and find a spot where this line is dropping rate of change, and then at the same time the market's going higher. It just really doesn't exist. So it's a really good barometer on where the market is. It doesn't mean that you're going to go up or down, but it does mean that if you're dropping, the rate of change which is happening is negative, and it's really hard for the market to go up. And you can see right in here, yeah, you can go flat, and as it goes up, it just means that you're starting to change a little bit, and you can even drop while it's going up. That's okay. You can even flatline on it and still drop. That's fine. But you're not going to find a scenario where the rate of change is dropping and turning negative, and the underlying index or asset class that you're looking at with rate of change is going higher. You're just not going to find that. And so if you just use it from that standpoint alone, it's a great indicator. Now, I'm not saying that there's not pockets of strength here. Of course there are. Here's EUAD, and we can see this really clearly right in here. We can see how we're lifting up, how it looks great, and we're riding that 22. And this, of course, is the aerospace defense spot. But what stuck out to me today is here's Friday, June 20th. And what really stuck out is look at the amount of volume that you had today. And that's all we got out of it. That move, that's somewhat troubling. I would keep my eye on this because if we lose the European defense names, then what I think is going to happen is coming to fruition. Take a look if we just look at Germany. Now, if we look at Germany, we could see that we've taken out the high. We tried to retest that level. And then from that retest, we've absolutely collapsed. I'm just going to mark the high of that level. And you can see that we are now below that. And maybe we flip and maybe everything's going to be rosy. But if we go and take a look at the RSI here, we can see the high here and we can see the low here. Well, that's a negative divergence, no matter how you slice it. No matter how you want to look at this, it's a negative divergence and you're rolling and you're having a real tough time holding in here. Now, maybe you will hold in here. We don't know that. We don't know that you're definitely going to roll. I mean, here's the 55. Here's a 12.22 cross to the downside. That has been a precursor to break the 55 before. So it might be again. But you had a 12.22 cross to the downside here. So we have to really watch the 55. And what I would do with this is just put in a little alert on it. Because if you lose Europe's biggest economy and you lose their stock market, it's going to be a problem. And so I'm wondering if this is a precursor to things to come, and we're getting as to why I'm saying that. But the other thing that I would look at with the DAX is I would just look at rate of change again. And on the weekly, no, you're not in trouble. You're not breaking it. You're just coming down. I'm not looking for divergences. I'm not looking for anything like that. I'm just making sure that I'm above that zero line. And if you take a look at the DAX, we broke that zero line already. And since we broke that zero line, as I stated earlier, you haven't gone up. It's not possible really for you to rally with that pointing down. What you are seeing here is you're seeing a little positive movement. Now, whether that continues or not, that remains to be seen, but that is one bright side to what I'm talking about here. And if we can hold something in here and build, that would be fantastic. And I don't need it to outperform the S&P. I just need it to hold. I just don't want to get to a point here where these tariffs are really going to start impacting Europe, because that will spread over, even though people think it won't. And that takes us to some of Europe's biggest banks. And if I start looking at UBS, and I like looking at UBS more than HSBC, but we have to look at that one since it's the biggest. But if you look at something like a UBS, which to me is just that investment banking Swiss name that everybody knows, it's got like that kind of brand and cachet, at least over in the US it does. I watch this because it tells me what people are doing over there. And you can see, again, we have divergence after divergence. Is it a pretty chart to look at? I can put it in line form to make it prettier. But you see the higher highs, you see the lower highs, and you see it doing what it's supposed to be doing, which is following along and rolling over. And again, if we do just the simple things, here's a 55, well, you close below it. I'll make that white so we can see it real crystal clear. You can see that. And then we can just drop this in the candles as well, and you can see that today was where you're at, and this was the day that you closed below it for the first time since you broke above it. It's not a coincidence, and when we see this stuff, we really want to pay attention to it. Now, I'm not going to get into rate of change on all of these names, etc., but then flip to HSBC on the weekly, and you worked it all the way off, and you came all the way back. So this is really what I think people are looking at. And this, I could be wrong, but this is where we were. And then everybody got liberated. And then you rallied back to the highs and everyone's saying, okay, I understand that it's not as bad as where we were liberated, but is it as good as it once was before pre-liberation? And I think the answer to that's pretty simple. No, it's not. Now, this is a super thin chart for us to look at because of where it trades. But I do think it's important for us to just note a couple of things. Since this all started, you're just rejecting that level over and over again. You cannot get above that level, which means to me that our thesis is right. They're looking at this and saying, hey, we've rallied enough. It's time for us to come in. We're seeing the roll right in here, and we're seeing it roll over the RSI. And when we start to see that, it's something that we definitely want to pay attention to. I can't stress that enough. We definitely want to pay attention to that. It's certainly important. Extremely large bank in Europe, huge position in a lot of the exchanges over there and the indexes over there. And to me, it's running out of steam. And you don't have to take my word for it that it's running out of steam. There's an objective way to look at this. Once again, I don't care if you're riding the level and you're going up because it's just rate of change. It's going to take its time. As it goes higher, it just means you're going to get a higher rate of change. It doesn't mean you're setting up to go higher. It just means that you're going to get more volatility. But when you break the zero, and this is the important thing about this, and I can't stress this enough, this is why it's so important. When I break the zero and I'm negative and I'm pointing down, you're not going up. Show me a chart where it's actually been dropping and then it goes up. Not sideways, but any chart out there where this drops and goes up. That's what makes it so effective for how I'm utilizing it. See, once you understand what these indexes are and then the relation of the underlying indicator, you can use them more effectively. You can actually use them for the things that you find them to have value, not the things that somebody else does. So if we start to lose Europe, again, people are going, well, why do you care? I'm glad you asked. Are we losing Europe because the dollar is stabilizing? I don't have an answer to that. So you could look at this and say, well, the dollar stabilization started from with this April 21st. And then from there, we tried to break it. And then they came out and said the word stablecoin. And since then, we've kind of been holding in here. Is that enough to do what it's doing in the market? Are these 3 or 4 days enough to cause Europe to sell down and that the US doesn't have to worry about it? Because we're seeing stabilization in rate. That could be an argument that you could make because it started right around that 12th where we started seeing that weakness. Matter of fact, you could really make that argument if we looked at some of these like the DAX and say, well, when did this start rolling over and breaking? Well, here's the 12th. Oh, okay. So maybe that is what we're witnessing here. Maybe we're not seeing weakness. Maybe we're seeing an adjustment because the dollar stopped going down. So it's always important for me to poke holes in my own thesis. And people always say this when they watch these videos. Like, well, what am I supposed to do? Bro, nobody knows what to do. Like no one. Like no matter what video you watch, if someone tells you that this is exactly what's going to happen and they called it, run away screaming. All we have is data and we have past performance. And what we want to do is we just want to analyze. So if we watch the dollar go higher and then Europe's still rolling over, then you know that it's the dollar. If the dollar goes, flat or down and Europe's still rolling over, then you know it's not the dollar. What you're trying to do is just pinpoint what the issue is. Like I can't be any clearer about that. If someone tells you they know exactly what's going to happen, run away screaming, right? I can tell you themes. I can tell you what's going to happen with themes over the next year or two. That's pretty easy to do. But I can't tell you exactly what the dollar's relation to the European stock market is right now and how highly is that correlated. That's for us to try to figure out and put together through time and watching this. I think there's a canary in the coal mine here, and I would just sit there and watch this. And I think you can see it in today's action as well, but there could be some other reasons for that. So I do think we should start here and just connect a couple more dots before we get over there, but I'll show you why it's so important in a moment here. If I take a look at the SPY in relation to the gold, so this is SPY related to gold, and you can see where we are here at the end of March, that relationship SPY to gold. And you can see that we came right down here as well. Every single time that we've been in this kind of range, we've bounced. Whether that was 16 or the pandemic or recently, we've bounced and we've gone on a tear. So this is something that's telling us, even if I drop it to a daily, this is something that's telling us very, very clearly, hey, when you're in this range and you see this happen, there's a really good chance. I'm just going to drop a pin right here for a sec. Let's just drop it here. Super easy. I'm going to bring that down just a little bit. So as always, these videos are completely unedited. I find it's the best way to do it. Look at my notes and do them raw. So you have to deal with some of it, but at least you get the thought process with it. And it's not as polished. I think it's a better way to do these videos because you might hear something that stands out. But if you look at some of this, okay, that makes perfect sense. Oh, here's where we bounced in 16. Here's where we bounced in the pandemic. Here's where we bounced. So that is telling us like, hey, they're buying the index more than they're buying gold now for the first time in a long period of time since Trump was elected in November. I mean, if you really look at it, this is the first real bounce that you've had. So are they buying domestically again, and that's why Europe's coming in? That's what we would hope. We would hope that Europe is not setting itself up to have a bad economy or slide into some kind of recession. But are costs in Europe going up? And this is something that, I think you have to wonder about that because of not only the tariffs, but the scarcity of production because of the uncertainty of tariffs. And that's where I'm going to go with this. So if we look here, and right in front of us, you can write the symbol down, but here's what it is. It's the Thomson Reuters Core Commodity CRB Index. And if you look at this curvature, if this was a stock, you'd be foaming at the mouth. You would be literally going, I can't wait to buy this. Now, if we look at this, and I think it's worth our time to do this because I think that it helps us understand very clearly what we need to focus. If we take a look at this, we can see a lot. But petroleum products group weight is 33%, and that's going to be core crude oil, heating oil, unleaded gasoline, that's 33%. Liquid assets. So people are saying, well, it's going to be skewed to petroleum. Group weight 42% with a 6% weighting of each. And it tells you which exchanges they're grabbing it from. Natural gas, corn, soybeans, live cattle, gold, aluminum, and copper make up 42% of that index. Liquid commodities, sugar, cotton, cocoa, and coffee make up 20%. So if we really dived into this, and you can see lean hogs, nickel, juice, silver, and wheat, if you start really looking at this, you're well over 60% of this, high 60s, that are not crude oil, and they are not heating, and they are not gasoline. And I think that's important. So it's not one thing that's going up, it's all the things that are going up slowly that's making this curve. And this is important. Goldman had a real nice piece on this saying that in the next couple months, we're going to start seeing the inflation. And the reason for this is not because so much the tariffs, what they're saying is the uncertainty of what's going on with the tariff. That is more the problem. People don't know what to do, but they're slowing down production, which increases demand for the supply that they have. It's simple economics. People don't want to produce if they're going to be hit with a tariff and they don't know when they're going to be hit with the tariff. One of the things we're going to cover right after this is we have to go through semiconductors and what happened on Friday, because it's actually a pretty big deal. And it's important to understand this, especially going into Micron earnings next week. It's actually a huge deal, and we're going to cover it very shortly. But so we see this curvature going on, and at the same time we start seeing this curvature. Can we link this curvature to what's happening with what we see going on right here? Maybe we can, but I don't think so. I don't think you can really link this curvature to what's going on with Europe. So then that goes, and that brings us back to the dollar and say, well, can we get something out of the dollar on that? And the answer is, maybe. But again, when we look at the dollar and we look at how this is playing out, when did we really start rolling? In the 6th and the 12th, and we go back to the dollar. So what we're doing here is we're just analyzing what's happening. And then by using that analysis, we're trying to make a decision. Is it the inflation trade? Is it the tariffs that's doing it? Because if you can figure out what's doing it, then you know where your angle is to trade it, right? Because you're looking for edge. You're fighting for inches, not feet, not yards. So we'd have to say right now it's the dollar. And looking at this, we'd have to say that it is the dollar. And how is that going to be reflective in what we also see what's happening here with commodities? And if commodities start breaking out of these levels, it's going to be a problem. It's definitely going to be a problem. But there's some other things here that I think are important. One more thing in particular, but the SPY gold chart's pretty interesting because it does make me believe that maybe they're just rotating out of Europe and back into the US because of what we see going on right now. And now the US is cheaper and the dollar is stabilized. Because a lot of Norwegian banks buy dollars and then buy equities because of that. And if the dollar hasn't stabilized, they're not going to do that. It's a really big trade that a lot of people don't know about. A lot of people don't know that one of the top 10 shareholders was a largest Norwegian bank in NVIDIA. A lot of people aren't aware. And I do want to just point out this because this is also, and it ties in more domestically than it does, but it tells us like, hey, where's the money going? And I think this is really telling us that you're really setting up for a stock picker's market. And I think we've seen that this week. It's really not just, hey, buy everything. No, it's certain names that are moving and the others are being completely outperformed. And we're going to get into that in some detail today in this video. We have to. But if we look at VUG, VTV, and what this is this is growth and this is value. And what we see is that when growth gets to a level that's high, that's too high, that the market will tend to chill a little bit. I'll show you what I mean by this. So what does this domestic have to do with anything? And I do think we need to get to that correlation, but this is, maybe it's a segue. I don't really view it as small. But if we take a look at July 12th, right in here, and we just mark that off. And then we just go up here and go, okay, well, where's that July 12th? Right there. Okay. So we turn this bottom growth value into an indicator. And we look at these peaks, and when it gets to this 247 level, what happens? December 24th, 2024, And let's just find that. And that's going to put us right around here. Okay. And then we're going to show where we are right now, which is that 12th to 13. And that's going to get us right here. And well, there we go. Hold on one sec. Pop that bad boy there. And let's pop these other two down here so that we can see this. And what is this going to tell you? Well, whenever value to growth gets to this 245 or 25 level, for whatever reason, it tends to put in a high on the S&P. And I'm not really sure why that correlation, why that gets stretched and what that move is. But this is leading me to believe that we're turning into that stock pickers market. And so there's two things to take from this. When people always say, oh, well, what's the takeaway from this? What would you take from this? It's very, very simple. This is telling you that growth is overextended in relation to value in the S&P. Whether this holds or doesn't hold, it's telling you growth is overextended in relation to value, which means you're in a stock picker's market. Doesn't mean you have to go buy the value names, but it does mean that you're overextended. Are you better off buying here or are you better off buying the index here? I mean, it's not, don't overthink it. I mean, it's pretty clear that you did much better buying here or buying in here than you were if you were buying at these peaks. So that's the first thing to take from. Second thing is this also adding to the sign that we're seeing in Europe? And one of the reasons that I'm so adamant about this sign in Europe, we're just going to bring this whole thing home right now, is in front of us is the DAX and the S&P. And if we just go to 24 and we look at this, I'll just drop it to 24, we can see that we're being outperformed since 24. And people would say, well, that's because of whatever. I don't care. What we have here is we have tariffs, liberation, more liberation, peak liberation, and then the pause on the liberation, right? And then what do you see in here? What type of behavior do you really see in here that happens? Once it's paused, Europe rips and doesn't slow. So Europe is actually the leading, right? This is when everyone's like, I don't know why we didn't buy Europe. Because Europe's leading and the S&P is trying to figure out what it just did to itself. Because Europe's like, oh, everything's paused, so everything's back to normal and you guys are just dealing with your nonsense. Cool, later. And it just rips. And so we're back here dealing with our nonsense. And at that time, the DAX is just breaking out. So the DAX was actually leading the whole global stock market revival. And so if we're starting to see cracks, as we are with what we just spent time on looking at, then this could be telling us that we need to watch the DAX. Because if the DAX starts rolling over, instead of just going sideways, hence the reason to look at the dollar, then this is telling us like, hey, we might have a problem here. Now, I do want your comments on this because it's really important to me. I've thought a lot about this, and besides doing videos that are just predicated on, okay, this is the chart, this is what you're doing, it's also about how you think about what you're supposed to be doing. And I'll explain what I mean by this. So I compartmentalize all my trades. And this is a really important concept for people to get. And it's something that if you've been in the private community, you know I've gone over it 1,000 times. But there's really 8 different quadrants for the way that people trade. And a lot of people don't look at the world that way. But just real quick, you have to look at it like this. And this is one of the reasons why people are super inconsistent. And I'm just going to do it very quickly so you can understand. You have a day trading quadrant. And then you have what I refer to as which is I'm out by the end of the day. And then you have what I refer to as a swing trading quadrant, where you could be in for a day or a week, something along those lines. 3 weeks even, swing trading, doesn't really matter. And then anything from like 3 months to a year would be long-term. And then anything over here is going to be from special situations. So, and I'll explain what I mean by that. If you have a drug that's supposed to come out and that drug's supposed to go from phase 1 to phase 2 or phase 2 to phase 3, then cool. Then you're playing a binary event. If a company's going to get bought out like US Steel and you're playing that, cool, you have a binary event. Out of these 4 quadrants, you also have, this is where the actual asset is, and then this would be the derivative of that asset. So then you have 8 sectors there in 4 quadrants. Just because you're good at one of these does not mean you're good at all of these. And that in and of itself is one of the reasons why people run into problems trading. You're going to listen to this language that I use in a second when you watch this live, but I really want to hammer this point home and tie it into 2 different things. Number 1, the reason that day trades that turn into swing trades, oh, I'm losing money, so now it's going to be a swing trade. The reason that doesn't work is because that's not the premise on why you bought it. So you just lied to yourself, right? And then you're going to just lose self-confidence because of that. Really important to get this, guys. The second thing about this is if it's supposed to be this, then it's supposed to be this. If it's supposed to be this, then it's supposed to be this. If it's supposed to be a day trade, then it's supposed to be a day trade for those that are just listening in audio. If it's supposed to be a swing trade, swing trade. Whatever you're supposed to be when you do the trade is what it is. It's that simple. If you go and change it, that's when you run into problems. It never works out, and God forbid it does work out that you hold your losers because you want to extend out the time frame. That in and of itself becomes a problem. When you listen to the language of what I'm saying when I show you this live, you should be able to pick up exactly why I just went over that. But I want your comments if you want more about how you're supposed to think about this, because I don't really see enough people covering these topics. I see them pointing at charts after the fact and saying, look at what I did, look how smart I am. That doesn't really help you get better. So just a thought process there. But if we look at something like ASTS, and this is where I think we're going with the market as a whole, and I want to get this. You're going into a stock pickers market. It's very clear that there's going to be events and themes, and I love markets like this because this is really where I shine. It's not when everything's going up. I find that very, very boring. The reason it's boring is because there's no real alpha in it. Where the alpha comes from is when the market's going sideways or down, and you're finding the names that are going to go up or down the most and profiting from them. And they're going to become your technical fundamental stories. They just are. Something like ASTS and what's going on there with some of the news that came out, it's really starting to catch on. And this theme is starting to catch on with rockets, things along those lines. If you take a look at and I'll go through one other name, you have this base and these patterns, they exist. And it doesn't matter how long you're in the pattern, or it doesn't matter the name of the company that's in the pattern. And I'll show you what I mean by this. But when you break out like this, whether this is a breakout and a flake down, doesn't really matter. But when you have these huge controlling areas and you stay in those controlling areas for a period of time, and finally break out of them where it's like 1 or 2 bars, which is exactly what this is, they usually base for a very long period of time. And then after they base for that period of time, when they break out, they really break out. I'll show you what I mean by this. And you're going to see more of this pattern. It's that time of the year, so you're going to see more of this. So I just want to show it. So this is gold, and this is in 24. And you see gold popping up, coming right back down. Mark gold off on that big blow off bar, because that's it. And when this happened, I said to people, you're putting in a short-term top. And people are like, no, gold's going to go up forever, whatever. It took time for this to actually get up and over, and then for it to test that area. See how it tested here and failed? Tested, failed. Tested, held. Once that hit, that was it. I didn't mean to make a rhyme there, but we did. And then you come straight across and you look at this, and that took time. That took 86 trades. That took 125 days. It doesn't happen fast. But when you see these and they retest that area and they lift, you want to pay attention to these. I'll give you another example. This was a trade we did in 23 in the community back in the day. And it was AVGO and it blew off and everyone's like, oh, it's $900. It's so expensive. What an expensive stock, right? Because everyone now is valuation experts, right? If they're not war experts, they're valuation experts. So you can see how it explodes to the upside. Everyone's like, we're rich. And then we're not rich. We're back to eating Hot Pockets. And you get this range, this huge range from 92. Remember, this was actually 920 to 800. Like, oh my God, it dropped 100 points. That's it. It's never coming back there again. No, it just marks a short-term top. Now, when you go and look at this chart, you're going to notice something about this in regards to that ASTS. And this is actually a better example than gold, but test, rejection, Matumbo, 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 tries again, Matumbo, breaks out. What happens when it finally breaks out of that range? It's gone. Like you don't see it again. And these kinds of patterns, you're going to see a lot of this with that extreme move to the upside. It's coming. I've seen these patterns for 26 years. And then what happens is you just wait for them to retest that area. And after they retest that area, that's pretty much it. And then they start that next phase 2 or whatever you want to call it, but they start breaking out and running. And that's just the way it is. And then you just start looking for the next one again. And then you'll find the next one again, which is, guess, shocker. It's up here where you've broken out, tested it, and failed, right? You haven't gotten through yet. Doesn't mean you're not going to, but for now, you're not getting through that area. Really important to understand this. So when you look at something like an ASTS and you're going, oh, well, here's that area and we broke out. The question really that people have to ask themselves, and what I have to ask myself as a long-term holder of this is that enough? I think it might be. I think that might be enough. Like up, down, held, flips, goes. Like that could be enough. Like, hey, we tested this area and we held. And what you could always do is you could drop to lower time frames and then go, okay, well, did we really hold that area or was it something wonky? And you look here and you're like, no, on that, we held 230 institutional buying time. We came to that level. There's the open of that Monday bar. We held in here. So we did test and we did hold. Is that enough? Does it mean you can't come down to 39? Of course you can come down to 39 and retest it again. And if you break it, you have an issue. But for now, You're getting this wonky bar up here. Maybe that's something, maybe it's not. What really you should be looking at is, hey, we flipped this area and we want to pay attention to this now. And this might be something that's setting up very similar to what I showed you with the AVGO and gold. And we're looking at this from a technical standpoint. Please don't get into me in the valuations. That's not what we're doing. We're looking at a technical pattern that repeats itself over and over and over again through history. We're identifying that pattern and then we're trading off that pattern. Watch this live and listen to the language that I use to describe what I'm doing.
ASTS has got buyers still. You are setting up a flag, so might go again. I bought more ASTS. I buried more of that in an account of mine, and I have it on for a day trade too. On the day trade, I'm trimming on that pop right there. On the swing trade or long-term account, I'm not doing a darn thing with it. I'm just leaving it trimmed, new highs. You really don't want this breaking that right there, that wick. You really don't want to break that 46.73. Trimmed up $2. Trimmed ASTS day trade. I'm out of it. The day trade 100%. We're undercutting here, and that's it. I'm not selling any of the stock I bought in the long term.
And the important part of this is compartmentalization of trade. So in one account, yeah, I'm ripping my face off and I'm just up $2.5 on the day trade. It reverses, it sets up perfectly on that reversal. And I'm going to start doing way more pattern recognition stuff so you guys can get this. Here's your retest. Here's your lift, 1, 2 down. There's your liquidity grab right underneath of it. It was just perfect. Tries to lift, fails. That's it. I'm out. That's enough. I'm not waiting for this. It's so interesting to me when I watch guys talk about like, oh, I watched the VWAP and now you're over the VWAP, you're under the VWAP. Well, which one did you buy? Did you buy over the VWAP and then you're out because it's under the VWAP, or did you buy the second VWAP? Like, if you trade like everybody else, you're going to get the same types of trading results. What you want to understand is human behavior throughout the trade. What actually is going on? Oh, you're rallying? Oh, people got scared? Well, what happened when they got scared? Did somebody else step into that pain point? You're constantly looking at pain points and you're trying to think what the other people are doing. Once you get that process down, oh, you tried to break out, you failed, inside bar, look, a liquidity grab. And you're just marking those spots off over and over. Oh, look, you pushed, you undercut again to see what you could grab, and then you went higher. Like, it's telling you what it's doing over and over again. Oh, you've reversed up here in a bearish engulfing, and then you broke down and you closed at the low. Well, that's not good. Let's mark off that area and see what happens there. Oh, you tried to break out above the top of that area and you failed and you closed below it. Okay, I'm out. That's it. Did you ever get above that area? No. It told you where the pain was. And that's really what you're looking for, pain points. Super easy when you're used to it. But again, I've been doing this a while, so it's easier to spot. That's very different than going, I bought because it's above VWAP. Well, now what do you do? It's below VWAP. Oh, it's back above VWAP. Well, what if you bought it again? It went below VWAP again. I mean, you're just going to get chopped up. So it's best to understand the players and where those players are. I'm not saying not to use it, but like understand it's more important to think about where the pain points are. And then when you flip those pain points to possibly use those areas as areas of interest to enter, right? Like you flipped here, which clearly you have an algo saying, we'll sell everything that you got right here. And then someone's saying, well, we're going to buy everything you have. Well, maybe that's going to hold, right? Or maybe it's going to get Matumboed. No, it held. All right, pain point. They flipped. Let's go. So this is telling you something. You can either pay attention to that or not. As far as the space, I just want to point out another name that's super interesting that I was watching. And in the comments, because I don't know them all. I truly don't. If you have other names that are in this space, I'll show you the ones that I've been whacking around. But the Rocket Labs, I was not a fan of the way this blow off, and we just talked about these particular patterns and these blow offs, and it's super important to get this. But what you do is you just you look at them and you mark off these key areas. And once you do, you're like, oh, well, that's kind of interesting. Then we've pulled back and then we've rallied. And then what's important about this? Well, if I break that and we haven't been able to close above that, that's going to be of interest. The other thing that's going to be of interest is if I close here and I just look at that, what's that telling me? I don't know, it's telling me I've got the fourth highest close I've had in years and possibly ever. So I have to go back in time and just say, is that a statement? Yeah, that's a valid statement. And then I look at this on a weekly and go, oh, that's the second highest close I've ever had on the weekly. Maybe I should pay attention to this, right? Because it's telling you something. And it's just up to you whether or not you know how to listen to what it's actually telling you, right? Are you actually hearing what the chart's saying? Watch the volume pick up here. And you can see how that's going, obviously very well, and the volume's increasing. Stories, themes, that's where your head has to start being at least into September. That's where this is all going. It's all going into story stocks. It's all going to themes. I've seen this cycle play out before and before. Spoiler alert, it doesn't end well for the large caps. And we'll get into more of this if we have the time. If not, I'll carry it through Monday, which is why I always say subscribe to this. But keep the comments coming. I do find it helpful. Lunar's another one that I've been in, and I've been in this one since like 8, and I wrote it up, and I'm just sitting with it. But I'm really curious about this space. I started looking at names like HWM, and I'm not an expert in the space at all, but I'm still trying to figure out like where the players are and how the players fit. There's this whole space with Golden Dome and satellites. It's not going away. It's only going to get bigger. That's my opinion of it. So it's definitely an area that I think that people should focus. Let's get to some of the big dogs that are having news this week. Now, the best way for me to look at this is index sector stock. So I always look at the market and I go index, and what's the index doing, which we've covered in detail. And then what am I going to do about it? Sector, meaning not only do I want the sector and the stock, but I have to understand where I am in the food chain. So am I looking at this for swing trades, day trades, long-term, etc.? I don't think this theme's going away. And I just want to go through a couple things here that I think could add real value for you to kind of start snooping around and finding those ideas that could actually be worth your time. So something like Jedi, this is VanEck Space Innovators, and they own some of the top names that are out there. You can go and look at the top 10 yourself. We went through one of them, which is ASTS. The other one is RKLB, and it's about 20% of this. And you can see that this is a UCIT, so it's not just an ETF that's based in the US. So I do think it's interesting to watch this. I do find it fascinating to watch how this stuff's setting up and how it's acting. And I don't think that this stuff's getting enough attention yet, because you're not seeing institutions flood into this, and you're not seeing this big rush into it. We've seen the space panic before, where people have to get into space and satellites, and a lot of people have that EchoStar dish kind of taste in their mouth with this stuff, but they're not really getting where this is going now. And I think that's super important. So we look at something like a Jedi, it's setting up perfectly. Like the stair steps absolutely perfect the way that this is setting up. I do think you should be paying attention to these names. You look at something like a UFO, which is obviously, these names make me laugh, but Jedi UFO. But you are seeing the same thing here, very similar, different makeup. I'm not going to get into the top 10, different makeup of the names. And what I think so fascinating about this one, if we just drop the anchored VWAP since inception, you can see right here where you tried to break over it, couldn't, held, and now you made a higher high. So you're breaking that, I won't call it an IPO because it's not, but you're breaking that inception VWAP, and you haven't done that. This is not something that's happened, and I think that there's real value in diving into these names and seeing exactly which ones are doing which. To me, this is really important because you're looking for sectors that are going to have the names that you can drill into. I mean, there are some big dogs we still have to go over that I think are flashing a lot of signals at us that we should be paying attention to. But if I look at something like this, I think it makes sense. Other space that I think it makes a lot of sense, and this is one that we've been in for some time, but the nukes. Also, if you're trying to get into the community, there will be there is a wait list, and there will be invitations that are going out this week, just FYI. If you're trying to get in, there is a link in description, and I also put it in the pinned comments sometimes if I remember, but it's always linked in description. So you see how you broke out on nukes, and then all of a sudden you stopped, and now you have this reversal, and people are thinking that's it. Usually you come down and you want to see the retest, just like we went over earlier in the videos with the stocks. You want to see something very similar. I think that this one makes more sense because of the way that it's positioned, but you're going to have to go through these names yourself, and you're going to have to look at them. People will look at URA and say, oh, well, that's a reversal bar. Maybe. And I'm not suggesting to look at these things and say, oh, you have to get in now. But I'm saying from a theme perspective, there's themes out there, in my opinion, where we're looking at AI. And yes, we should be looking at AI, of course. But there's also these other themes out there where how are you going to power AI? Well, the only thing that actually makes any sense is going to be uranium. Like nothing else. If you really understand the amount of power that you're going to need, the only thing that makes any sense is uranium. Like nothing else is going to get you there. Nothing. You might have the ability to use something like natural gas for a period of time to bridge the gap, but nothing's really going to get you there. And I think that's super important for us to get. I think it would be remiss if we don't talk about Tesla and their big day on Sunday where they are going to do this test of the robo-taxi. It's already gotten panned by a lot of people because they understand that it's going to be this very small geofence area. You're also going to have a driver in there in the car. Apparently they have to. And then on top of that, it's closed to the public. It's only VIPs that are going to be able to be in there. So it's not really this thing that people thought it was going to be. And in and of itself, that's going to be more of an issue for the company. And that's why it acted the way that it did. And I'd watched that level ever since, the Elon Trump, battle royale. you've never really been able to get over that closing price of that previous day. And I think that's a super important level for people to watch and really see how it goes there. And you are seeing that weight on the name. If we just did the simplest things and looked at this and said, well, here's the 12 and the 22. And the way that we look at the world is the 12, well, do I really want to swing trade it? And 22 is telling me, are the bears or the bulls in charge? Well, if the 22's there and we clean that line off, if the 22's there, who's in charge? Well, the bears are in charge. Well, what's my bias? Well, my bias should be long, but I do have institutional support. Great. When it gets to 300, I'll look for that institutional support. Until then, I have to understand that the bears are in charge. And this is how I view it. You should view it how you're comfortable with. Other names that'll be very big on the week, you guys are going to have to watch Micron. You have earnings coming out on Wednesday, and stock's just been on an absolute tear. We've seen some of these names that are showing real signs of that tear continuing. You did see KLAC get absolutely smoked on Friday. And the reason for that was Lutnick's comments. And Lutnick's comments were really simple, just the fact that he could terminate certain waivers for Taiwan Semi and other companies. What exactly does that mean? The U.S. is reportedly weighing canceling waivers that allow some global chip makers to send American technology to China. Commerce Department official told Samsung, Hynix, and Taiwan Semi this week it may cancel the waivers allowing U.S. chip-making technology into their Chinese factories, the journal reported. Semiconductor stocks declined on Friday. And I think this fits perfectly to what we've been talking about here, where we're seeing these names move, such as semis, and they're breaking out. But the headline risk, it's like, where's Waldo? We just don't know what we're going to be hit with next. And then you start looking at things like AMAT, they're moving, and then you might have an issue. People have to understand names like SanDisk. All of a sudden, by the way, they are now in a position where, they're based in California, but so is Micron. So are these companies going to be affected by that, or are they not? It's very interesting to see how this is going to play out and what they're going to do. Are they going to cut their waiver on Taiwan Semi? And how much weight does that really give them, considering Taiwan Semi is really based in Taiwan? So are they going to say it from their production from here, that they just spent billions building a factory? It's a very interesting time as they try to control something that, in my opinion, is completely uncontrollable. And this will be a focal point specifically when Micron reports earnings. I think we'll get more clarity on that. And if they put these waivers in place, like names like ASML that look great, like they were running, it's just another day of just getting, clubbed, because we just get Lutnicked over and over again every time this guy speaks. So it's definitely something to watch. The other thing I would say is that the theme that you should probably be focused on is stabilization of coins. I'm not going to justify this going from 65 to 240. I'm not here to do that. I don't justify stock prices. They are what they are. This is something that I trade and have done exceptionally well in. At the time of recording this, I have no position in it. I think people would do very well to look at the relationship between coin and Circle, and I think that would serve them very well. This is something you guys have seen if you're in the community, where I keep talking about this cup and handle, and then I've obviously exploded to the upside. This is something I have a decent sized position in. But stabilization coin, payment processing, I don't think people are getting these themes yet. And if you just spend time looking at the themes that we just went over, I think you're going to be ahead of like 99.9% of the traders that are out there right now. That's it.